like many other companies, have absolutely shat the bed in terms of their share price. They went online in the markets around December of 2020. And since then, I mean, they had a little blip where they went to $183 a share. That was their 52-week high. And since then, they're down by over 80%, right now trading at $28. And basically, right now, they're down 17% on the day after they released their Q2 results. We're going to be talking about whether you should be buying the dip on this company. Overall, it has not been a good year for growth and small to mid cap stocks. As we can see, this stock is only $3 billion, and their revenue growth and everything like that were actually pretty good. They grew by about 30% year over year, but their income, they lost 23 cents a share, which was even better than analyst expectations. But I think that just overall the current market sentiment is not around these high growth small cap stocks. You look at C3.Ai. This is an artificial intelligence type company. You look at a lot of data-driven applications such as Teladoc. That's a bigger company. It's down by over 50% over the year. Clover Health, even a lot of the SPAC plays are down. And the only companies that are surviving really in this market condition are like the large cap stocks like Apple. It's reaching its like 52 weeks highs. So just some brief things over their earnings transcript. Basically, they were pleased with this Q2 results here, and this calls webcast, etc., etc. So basically, top line revenue was $58 million, a 41% increase over the prior year. This exceeds company guidance and all published sell-side analyst expectations. Customer count was up by 63% to 104 from 64, which was obviously an increase of 63% over Q2 of last year. And GAAP ended at $465.5 million. Our cash burn was $19.8 million, reflecting increased investments in human capital, marketing, and brand equity. We finished with $1.8 billion in cash. So $1.08 billion in cash means that they have a lot of cash on hand to basically fund this growth, enabling us to continue to invest in growth for some time. Basically, hopefully they're not going to need to raise any money through a selling stock on the open market, because that dilutes shareholder value. So that's at least a good sign. As we enter Q3, our increased revenue visibility and improved sales proceeds leads us to raise revenue guidance to $62 million to $68 million for Q3 and 248 to 251 for the fiscal year 2022, representing a 35 to 37% growth rate year over year, up from a 17% growth rate in fiscal year 21. And so I like all of this news, and we'll just look a little bit at what happened to the stock. So absolutely getting shattered. It was down by like 20% at one point, and now it's recovering a little bit. And if you're looking at the chart, just to look at like kind of momentum play, a lot of stocks are like this. I'm telling you. I think that this stock right now is just one of them that has just been beaten down like an absolute dog. I haven't bought in yet, but I'm really thinking of buying the dip on this stock here. Just because if you believe in it long term, I mean, like it's really hard to see that there's like to not see the upside potential on a stock like this. And we'll go over their website and what they do specifically in a bit. But yeah, I mean, basically, I like to buy a stock when the candle goes below the lower Bollinger Band. The lower Bollinger Band right here is in green. The upper Bollinger Band is in red. Basically, you want to sell on when the stock reaches the red Bollinger Band, and pretty much buy when it reaches or even crosses below the lower Bollinger Band. And again, I mean the RSI just incredibly low. It used to be like a 30, now it's like below. I mean, let's see right here. It's right now it's like sitting at a 20. So I mean, it's just like just so low, and like the momentum here is strongly in the red. But I think that this stock can nicely recover from this move, especially when people realize like their growth prospects and the customers that they have, from Google to Microsoft to even the Army. So I think that's impressive. A lot of people are viewing this stock right now, and most people are in the red, especially if they bought it at the beginning. And I think this was even a Cathie Wood stock for some time. So this is Enterprise AI, solving the previously unsolvable to unify your data, build AI models, and deploy critical AI applications. So they have the C3.Ai suite, AI applications, data vision, CRM, and citizen data scientists, etc., etc. So this has applications in so many industries, from healthcare to oil and gas to utilities to government to transportation and telecoms. I mean, if you go over and look at their customers, U.S. Air Force, Shell, uh, Baker Hughes, Con Edison, Consolidated Edison, that's the utilities company, Department of Defense for the U.S., 3M, a huge manufacturing company. So a lot of customers are going to be using AI into the future, and a small business that's accelerating their growth is C3.Ai. So if you believe in the long-term vision of AI, which is using big scale data driven models to um, improve sales for other companies, I mean, you should be buying on this dip. And I need to do a little bit more research, but I think this company is starting to look really attractive, as it is other small cap stocks that are just getting absolutely dogged by the market. So these are their, I've talked about this right here. Net loss per share was 55 cents compared to 39 cents 1 year ago. Non-GAAP net loss was 23 cents, which was reported, compared to 26 cents 1 year ago, well above sell-side analyst consensus expectations. So pretty good. And you can read their highlights right here. And pretty much what I want to go over is their summary here. So revenue was up by 41%. Subscription revenue was up by 32%. Gross profit, 35%. So just overall pretty good. We can see a 41% year-over-year growth rate. So, I mean, they're expecting to do about like 63 million for the next quarter, which again, I think is pretty impressive. But you have to note that this growth came at the expense of, using a large amount of money for, we'll look at right here, for sales and marketing. So they wanted to basically market their product to a variety of customers. And so their operating expenses increased by 117% of revenue this quarter right here. So research and development was 45%, and general and administrative cost 16%. So in total, they spent 117% of their revenue on these expenses here, broken down. So I think this is why people are selling the stocks, because I mean, like, they're nowhere near even like breaking even. They're still losing 117% of their revenue in this quarter, even though they've grown at a 41% rate. So, I mean, but that's to be expected with a company that's just starting out. And what makes me sleep safe at night, if I was an investor, was that they have so much cash on hand. They have over $1 billion of cash on hand. So, if we can see here, non-GAAP operating income was negative 22 million for the full year. So again, just market sentiment, you might know that like interest rates are probably going to rise soon to tame inflation. That's not going to help high growth stocks like C3.Ai. So this also might be baking into the stock market price and stock market correction of like 83% since the company's highs. Like it's, subscription revenue was 47.4 million. Professional service revenue was 10.9 million. Which is an increase of like about 19% of their overall income, and total revenue was 81% based just off of subscription revenue. So, I mean, if you're looking to buy the dip, C3.Ai could be a pretty good play, especially since, I mean, you're looking at the 1 year chart. Like they started out with at around $92, and now they're trading at close to 70% below that. So if you're looking for a deal, looking for a bargain, consider C3.Ai. That's all I have for you today. Feel free to check out the links down below in the description. Feel free to support me on Patreon for my latest buys and sells, as well as subscribe to this channel, and give this video a thumbs up if you enjoyed it. But take care, love you all, and until next time, I'll see you.